Hello YouTube, and in today's video I'll be covering my new portfolio. So first of all, let's go through the selections. First of all, there's AMD, Advanced Micro Devices. So AMD is an American multinational corporation and semiconductor company based in Santa Clara, California. The reason I'm interested in this is because it's a potential play on artificial intelligence, because they make a lot of semiconductors for data centers, etc. It's got a market cap of 268 billion. And as we can see from the charts, it's been in a gradual uptrend over the years. Let's go through the chart in more detail. So here's the chart. You can see there's a gradual uptrend. Any dips on this is a good buying opportunity, in my honest opinion, to be honest, because there's potential for greater upside. As we can see, if there's any potential correction on AMD, it's a good opportunity to buy shares for the long term. Next, we have Alphabet, Class A, Google. It's a $2 trillion market cap, and everyone knows Alphabet is basically a conglomerate tech holding company that basically owns companies like Google. It's restructuring Google, basically. You can see it's in a gradual uptrend over the years. Looking at the income statement in more detail, you can see that revenues have been growing by 8% year on year to 308 billion. It's also got a healthy balance sheet as well. This is another top pick. Let's just look at the chart in more detail. Let's analyze what's been going on. So with Google, as you can see, we've been in an uptrend for a number of years. It's a nice trend line here to maybe add on, but it's unrealistic. You can see we've had this falling channel here, which we broke out of at the start of 2023. And it's been gradually progressing an uptrend. As you can see, the performance is basically really good over the year. It's up 40% in a year, Google is. So yeah, it's another great pick, and now it's started paying a dividend yield for the first time. It's got a yield of 0.46%. That's my second pick. Third pick is Ashton Group PLC. This one's listed on the London Stock Exchange. As you can see, over the last 5 years, it's had a terrific performance. It's a £25 billion market cap. Ashton Group is a British industrial equipment rental company. My idea is basically around this is basically as the economy continues to industrialize and industrials start to get some momentum, this could be a top play. As you can see, over the revenues over the year has been increasing 21.41%. So it's a win on the revenue as well. And the net income is also very healthy, increased 29.3% to 1.62 billion. It's also got a healthy balance sheet as well. That's what you like to see. You like to see the assets growing more than the liabilities. Let's have a closer look at the chart. So as we can see, we've got this potential wedge pattern. And we've also got this long extended trend line over here. But this wedge pattern should be breaking to the upside on balance of probabilities, of course. You can argue it's already broken out, but if you're saying it's more extended, then basically you can still any move up into past resistance over here would be a bullish breakout on Ashton Group. Next, we've got the world's largest asset management company, BlackRock, with 10 trillion assets under management. Again, this one's been performing really, really well. It's about maintaining my whole approach to investing is about maintaining a diverse portfolio. It's a 116 billion market cap, so slightly small, obviously, compared to the likes of Google. But yeah, it's got a 2.61 dividend yield. And you can see with BlackRock, again, there's been steadily growing revenue over the years. Let's have a look at the chart. As we can see on BlackRock, you've potentially had this inverse head and shoulders pattern over here. If I just draw that out, basically you've got your left shoulder over there, got your head over there, you've got an extended right shoulder of sorts over here. So in general, with an inverse head and shoulders pattern, you tend to break out to the upside. So if you say this is the neckline, nice horizontal neckline, if you measure the target, you can measure it out like this. Projecting out into the future, we can maybe say there's going to be a target of over $1,000 a share. At that point, the company will probably be doing a stock split or something, I would assume. So basically, yeah, it's been a long-term BlackRock. It's a name you can't really go wrong with, to be honest. It's got a nice dividend yield of 2.57%. And yep, it's another great pick. So the next name after BlackRock that we've got is Investor AB Class A. It's a Swedish conglomerate. It's listed on the Swedish Stock Exchange. And this is an interesting company. It's one of Sweden's largest companies, and it serves as an investment arm of the prominent Swedish Wallenberg family. The thing I like about this one is you've got very nice net income margin over here. There's a steady growth in revenue over the years as well, and over the quarters. Let's have a look at the chart. We can see this has had a really good uptrend over here. But a great symmetrical triangle breakout over here. Ever since that breakout, you've basically just been going higher and higher on the shares. So yeah, you can see that there's been a lot of gradual upside on this name. So yeah, it's another great pick. So next we've got Morningstar. And Morningstar is a 12.72 billion US dollar market cap. It's got a dividend yield of 0.54%. Morningstar is an American financial services firm headquartered in Chicago. So it's about diversifying the portfolio. So we've already had a semiconductor pick in AMD. We also had a tech pick in Alphabet. So it's about diversifying the portfolio. You can see that there's been revenue growth and net income growth over the years. So this is another great pick. We'll have a look at the chart. So again, with Morningstar, we can see we've had a long uptrend since it first made its IPO. Maybe on this trend line over here could be a good entry for a long-term position. But this is obviously the resistance, so we'll be watching this level very closely. You can see it's been in a gradual uptrend over time. We've had a nice breakout over here. We've had a nice breakout over here. So it keeps breaking out to higher levels. That's another interesting pick. Then we've got MSCI, which is a 39 billion US dollar market cap, and it's another American finance company headquartered in New York City. The revenue and net income has been growing gradually over the years, and that's another thing I like about this company. So let's have a look at the chart and see if there's any further details we can have. So again, with MSCI, we're getting a nice sort of wind up over here. Symmetrical triangle. Symmetrical triangles can break to the downside, but potentially to the upside as well. But because we're in a long-term uptrend over here, I would assume they would break to the upside on balance of probabilities, of course. It's got a dividend yield of 1.16%. So again, MSCI is a top pick. The other name in the portfolio, another semiconductor, is NXP Semiconductors. NXP Semiconductors is a $70 billion market cap. It's got a dividend yield of 1.46%. Annually, you can see there's been gradual revenue growth over the years. But again, with chips, a lot of demand was brought forward after COVID. So there's still a lot of, so there wasn't much growth in revenue over the last year, but that's not of concern. Over the long term, you can see the revenue's been growing, the net income's nicely been growing. Looking at the balance sheet, you can see the whole assets are growing faster and the liabilities aren't growing as much. So you can see that it's a very healthy company. It's a good, solid long-term investment over the last 5 years. It's up 214%. NXP Semiconductors is a Dutch semiconductor designer manufacturer with headquarters in Eindhoven, Netherlands. So this makes all sorts of semiconductors as well. Let's have a look at the chart. And we can see the long uptrend on this as well. On this name, you had a bit of a slide down here in basically a channel, and you broke out. And we're currently making an all-time high, so there's currently no resistance on this. So this could go much, much higher. That's a monthly view. You can break it down to a daily view to get greater detail on what's happening now. You can see there'll be an opportunity to buy maybe on any dips. So that's another interesting name to keep an eye on. And finally, we've got SPX Technologies Inc. So it's a 6.67 bill market cap. It's the smallest holding in my portfolio. You can see it's had spectacular growth. And my thinking behind this name was basically there's going to be a lot of growth in the sector that SPX Corporation's based in. It's basically an American manufacturing company, so I'm paying the manufacturing part of the economy over here. The company operates within 4 markets: heating, ventilation, air conditioning, detection and measurement, power transmission and generation, and engineering solutions. So example, SPX's products include cooling towers and boilers. So my idea on this one is as the industrial growth continues to happen in America and across the global economy, you can see the revenue and the net income is really growing really quickly on this company. So it's a long-term hold for me as well. So let's have a look at the chart. And you can see that this chart's gone parabolic. It's probably not a good time to enter, maybe on any dips or any corrections in the general market is maybe a good opportunity to enter. You can see you've had a nice uptrend on this stock. You've had a very nice uptrend. and hopefully there's more upside in the future. It doesn't pay any dividends, but as you can see over the last year, it's up 90%. So it's another great company to be invested in. So just to recap the holdings again, we've got AMD, Google, Alphabet, which is basically Google, AHT, Ashton Group, ALV, Autoliv. I think we forgot to mention or go through Autoliv, so we can go through it now, actually. Let's go through Autoliv. So Autoliv is a $10 billion market cap. It's domiciled in it's US domiciled Swedish headquarters, automotive safety supply with sales to all leading car manufacturers worldwide. So my thinking behind this is a lot of the older cars get replaced. There's going to be a lot of obviously demand for new safety products for a lot of the newer cars. So my thinking is as vehicles get upgraded, because a lot of vehicles on the roads are 10, 11, 12 years old, and obviously new vehicles need to be bought at some point. See the revenue and the net incomes continuing to grow over time. So let's have a look at the dividend yield on Autoliv. The Autoliv dividend yield is 2.16%. And over the last 5 years, you can see it's had spectacular performance of 104.21%. We'll have a look at the chart in more detail. And again, with Autoliv, you can see we've had this consolidation over here. And we've broken out to the upside out of this consolidation. So it's again another company in a long-term uptrend. One thing you will notice with all my investments is I like to buy companies that are in uptrends with growing revenues and growing incomes, because basically that makes sense. There's no point buying decliners or laggards. So say, for example, a stock that's basically been declining recently is Pfizer, not to be picking on anyone's stock or anything, which may be a good idea to have a look at Pfizer, because this is a key example of a stock that's been falling over time recently. Again, you could argue there's a recovery, but every single time there's been chance of recovery, it's always broken down. So it was in an uptrend, a gradual uptrend over time, but it's broken down now. So there's potential for more downside. I like to buy charts that are trending to the upside. So just another look at my portfolio again. So we've got AMD, Google, AHT, ALV, BLK, Investor AB Class A, which is Morningstar, MSCI Inc., NXP Semiconductors, and SPX Technologies Inc. So as you can see in my portfolio, that 10% of them are climate leader investments, 70% are large companies. So I like to invest in a lot of larger companies, try and beat the S&P 500. For those of you who don't know, the S&P 500 is top 500 publicly listed companies in America. So 40% is medium dividend investments and 60% is high PE investments, which is natural in terms of obviously with growing companies, they tend to have higher PEs in general. So we'll just have a look at the S&P 500 to finish the video. And then thank you very much for staying to the end. If you like the video, don't hesitate to like, subscribe the video. And I'll be giving future portfolio updates and tips as we go along, really, on this investing journey. You'll be able to see all my progress over the coming months on this channel. So if we have a look at the S&P 500, you can see it's in an uptrend and we're breaking out to new all-time highs. So a lot of the bears are upset. We've had these trend line. Obviously, this trend line's gone parabolic now. And we've had this new trend line over here, potentially to keep following. So keep making all-time highs. So basically, the best important thing is to start investing as soon as possible. And over time, your money will compound and grow. So thanks, folks. That's all for today. That's all for today's video. Hope you liked it. Please don't forget to like, subscribe, hit the bell icon, and you'll be getting all my future updates. So that's all for today, folks. Thank you and goodbye.